It's been a couple of months actually since we talked about this name. So they're about to report earnings, NIO. So the reason why I'm making this, I saw somebody mention in the Discord saying that, is it a buy? Okay, let's talk about this one. 650. When I said last time, some people didn't like it. Of course, it makes sense. I made a video saying that $6.50 is not cheap. September 28th. I don't know where it was trading at that time. Somewhere around here, 7 and went as high as 750. So now stock is trading at $4.63 and market capitalization of NIO at this price, $9.6 billion. Okay. So it's not a cheap stock for me. Are they making money so far? No, they haven't made any positive earnings per share report, but we'll see what they're going to report. Certainly, we know that, yes, their revenue growing makes sense. And also, in general, EV sales doing fine, I guess, right? But this stock year to date is down 50%, 49%. And also, if we go yearly chart, I'll show you the whole picture. Every candle represents 1 year of price action. All-time highs, $6.66, basically 67. All-time lows, $1.19. 4 consecutive years of downtrend so far, okay? And also, I have shared this chart with you guys. Again, if people don't understand, that's okay. These videos are purely for entertainment purposes only anyway. So if you have to learn hard way, there's definitely a way, to go about it, just by losing money, and that's the only way. That's how I learned this. Dilution, 100%, okay? So since 2020, their shares have doubled, okay? From 1 billion almost, it went to 2 billion in the last 5 years. A lot of people don't even understand the word dilution. And I cannot keep talking. If you're new to the channel, I cannot keep talking about same thing because I have been talking about these names for quite some time already. So you can go watch old videos. So is it cheap right here? Well, $4.63 for a lot of people will seem cheap. But for me, I look at it as a $9.6 billion company. I don't look at it as a $4.60 a share company. I never do. And again, this is something you can implement in general investing or trading as well. Because even though I trade a lot, I still care about the company's value. I don't care about the price of the stock at all. So ultra short term, what it can do, support, you can see I have drawn it here. This year's lows, $3.63. That's what I would be watching as a support. Resistance, $5 I would be watching as a resistance. If you bring up moving averages for the stock, almost $5 would be the 200-day moving average, and then you have a 50-day moving average trading at basically that price at 553. So basically anybody who bought it after this Chinese stimulus headline pump, anybody who bought it at these levels are negative at this point. And these are the resistance I will be watching. So if it pops on earnings, definitely it will have a pretty heavy selling pressure. It will be met. Again, it depends. So the reason why I like to go long stocks, let's say, there's no point of parking the money for me personally anymore into these shenanigans where it's downtrending and it's basically reporting quarter after quarter negative earnings, is, the performance of the stock, right? Market rewards the EPS, positive EPS, and then growth. not only growth. Of course, there are instances where you're growing, but again, this is not a sophisticated business. This is not a unique business. There's only one Tesla. There's no reason. Again, I'm repeating myself again. There's only one Tesla, and there will be only one Tesla, and that Tesla is doing well, and there's no reason to look for another Tesla. Okay, we have talked about this one many, many times. So my point is, like, very simple example. Robinhood, when it was making negative earnings per share, I was bearish and I was not touching it at all. As soon as they started reporting positive earnings per share, people started piling in, volume started popping up, stocks started all of a sudden performing from $8, and right now it's trading at 35. Identical strategy when it comes to these names. I wish them well. I hope them to start reporting positive earnings, and at that moment I will definitely be coming and looking for same sort of a setup. But in the meantime, I respect my cash, and that cash is not a lot of cash and it has to earn money somewhere else. I have already been 10 years ago, 7, 8 years ago in a losing positions, which affected my mood. It affects everything, right? When you're sitting as a backholder in a losing position, every tick, every morning up and down, it affects your mood. Doesn't matter what kind of investor you are, doesn't matter how much of a money you put in there. It affects your mood, and it has affected my mood, and I'm not able to cope with losing positions. So even if I'm down 50%, 100%, 90%, especially when I trade a lot of options, I feel very good of cutting that position and just moving on because I was wrong, okay? Also, there's one thing anybody should watch. Peter Lynch, this guy, retired billionaire, okay? Not many people may know them, but some people definitely know him. If you just Google YouTube, dealing with a falling stock, Peter Lynch, just watch that video. That's a recommendation. It's going to take 4 minutes of your life, and it will teach you something, definitely. But that's my approach when it comes to going along something, and I'm not good at just pointing my finger and saying, okay, this company is losing money, but it's hefty, but pretty much it's valued crazy, but I think they're going to do crazy well because they have a unique product. So I think I want to be early. I want to jump in. No, I was never right doing so. When there is a momentum, okay, that's different. A few years ago when I had a momentum, when they were not diluting and cash was everywhere, money was everywhere, all these losing stocks, and of course their EPS was improving at the time. That was the reason why market rewarded this stock to the upside. But by no means this was $100 billion stock back then. If they kept reporting positive earnings and maybe stayed afloat, but instead fundamentals got worse and worse, I understand they're trying to scale, but market tends to punish stocks that don't make money because there's a probability of these stocks not surviving at all. So that's the update for NIO. This is my take. Those are the levels I would be watching. And thanks for watching. See you in the next one.